Good evening, TheoTrade. This is Corey Rosenblum, and you're watching the Theo Nightly Video for the 14th of October here in 2021. And we have a rally. The rally's taken us right back to the middle of the range. And on Tuesday's video, that's where we discussed, which was middle of the middle or in between market. We're still there, except we are a little more bullish. So we've made a little higher high with a significant or strong bounce, and we're closing today's session here Thursday after financial earnings and financial reports, although the financial sector did not lead the session today, as we'll see in a moment. But the S&P is back above that 4,400 level. The NASDAQ trades back in the middle, around 15,000. And when I refer to the middle, it's the most recent last few months of range. So that's the high. Roughly here is a couple of lows. That's about 14.4 and just shy of 15.8. Where are we now? 1,500 or 15,000. And that's the middle. So that's the main idea as we continue to trade here in October. Earnings are coming out, earnings are in play, and of course we'll discuss financials, but those are where the market was focusing. So that can be leaders or different components of volatility, earnings and broad-based sectors. If they beat or miss or any type of reaction, that can levitate or flush or crush the market. So right now, in the bigger picture, the Dow, as seen from the other earlier reports, is pushing up away from the middle. So that is not that far from its high. And the Russell remains middle of the middle, and we can update that to be even more middle. And that is in the middle of the trading range. And again, that remains 2,300, 2,350. That is the advantage bears or short side of the market. And 2,100, 2,150 is the advantage bulls. Calls under here, puts up here. But in the middle, no advantage. Let's talk financials. Some of the main companies that reported were financial stocks, which included Morgan Stanley, which was up about 2%. That actually hit that expected move. That was a discussion from yesterday's session prior to the earnings. So butterflies or any type of volatility or expected move on earnings logic, these levels were projected from the earnings the day before. And that has crushed back down. Volatility is crushed back. But that expected move really was key to stocks such as Morgan Stanley and some others. And again, that was a projection from the expected move. So that's a mean idea how to look at that technique playing out with these stocks or stocks coming up next week. So earnings play have a specific trade strategy, risk strategy, and you can see how that plays out in multiple stocks. So Wells Fargo was another one. It was actually down today. We do have a mixed bag of what the financials recorded. Let's zoom in on that. And what we see, and here's how you might want to do watch list functions, or at least as we go through earnings, try to get a sense of what is in play and what we're looking at. So let's just get this in. We'll talk about days till earnings. That's a column you might get from the TheoTrade member studies page. And just look at sector. So we'll type this in and sort. And it's just a watch list here on the left side of the Thinkorswim panel. And that is the description. That's the stock itself. Right here is what sector it comes from. And I will sort by days till earnings. So these reported today. And again, a little bit of a mixed bag. In Morgan Stanley, Wells Fargo, Citigroup, we'll actually pull this over to see exactly how they played. And US Bancorp, etc. What's coming up? Goldman Sachs. That will report tomorrow. But then Monday and beyond, or the next week, I should say next week, we have lots of consumer staples. We have healthcare, communication, information technology. Some of the main ones would include JP Morgan, Netflix, Tesla, coming up next week, and some others as the week progresses. But that's a way to look at where the percent is, where the sector is, how to group them together, and by days until earnings tab. So that's what we look at. You can look at each stock individually just for the sake of the video. I wanted to highlight that as which ones are coming up. You can also find this under the Analyze tab and under, or the Market Watch tab, under Calendar. That's another way to look at which stocks have earnings coming up the next few sessions. I like to sort the watch list tab as well. Back to the sectors. The leading focus, or one of the main sectors in play was and is financials. And on the big picture, we'll pull back to a weekly chart here. And that is a all-time high. Underneath is technology. So our leading sector in today's session, remember the S&P is built up of about 9 major sectors. And they are seen here: technology, financials, consumer staples, healthcare, energy, utilities, industrials. And we like to look at it this way on our sector ETF grid. Again, 9 sectors comprise the market in general. NASDAQ is a little bit different, as is the Dow, which is just 30 stocks, and the Russell, which is broader, but it is small cap industries or small cap stocks. So we can look individually at which sectors are performing better or outperforming the market. Tech or XLK ties right into the NASDAQ, and that's leaders or monsters of tech. Y is discretionary. Discretionary would be something like Amazon, Tesla are leaders of the discretionary sector, but also Home Depot and Nike, McDonald's, Starbucks, Target, Dollar General, car companies, General Motors, Ford, eBay, Etsy, and others. Just think retail when it comes to the discretionary sector. And that made a new high. When a cross-check is at a new all-time high. And the way you look at this is just go to the tab, see if it's a monthly chart. Weekly would work fine, but sometimes we'll look at the larger perspective. So it did. So with respect to the broader perspective on XLY, we'll put that at 20 years, put that to a monthly chart, and that way you can see how the trend has materialized from, I like to compare it to, the lows or reversal point at the end of the last bear market, unless we count COVID as a 2-month bear market, which was very significant on a percentage basis and was a recession, it was a bear market. The most recent long-term bear market was the 2009. So we can look at technology, financials, which isn't quite as well above the high, recovery high. And that was a financial crash, financial market, housing market, etc. And we're not that high, relatively speaking, compared to technology, discretionary, and the others. So again, for the sake of the video, you can look at each individual sector and how it plays or is trading or is behaving with the market. So technology, discretionary, financials, industrials, there's materials, energy, which is in play because of crude oil. Crude oil is one of the main factors of the global energy shortage, as is natural gas and other stocks related to that sector. P is staples, which is defensive. V would be healthcare, and that is coming off the highs. That's actually a deeper pullback and has made it all the way down to this almost 200-day simple moving average. XLV is healthcare. Not a lot of healthcare names, but UNH, Johnson & Johnson, all these would be some of the pharmaceuticals. We think of healthcare as medical stocks, but it really runs the gamut of different pharmaceuticals or other companies in that mix. So CVS would actually count technically in the healthcare sector. Nevertheless, finally, the utility sector, which tends to be a little more like bonds, more stable, is weaker and is not really doing much relative to the other sectors of the market. So that's a look at that and what it means. Leading sectors are the offensive or the bullish, which is financials and discretionary, and to a lesser extent, technology and energy. Looking at the broader or the more narrow look at which stocks are making new 52-week highs or which ones are outperforming the stock market, leading the stock market. And the thought here is that that which is strong tends to get stronger. And I like to sort those as a swing trader on this particular type of scan. So I will scan stocks making new yearly highs. That would be right here. So public stocks making new yearly highs. Limit that to the S&P 500 and then let the scan pull up the candidates. I will sort them by market cap. Market cap is the largeness or how big the company is and how much it affects the broader index. So again, we have UNH, Bank of America, Salesforce.com, Oracle, Lowe's, Intercontinental, and Simon Property Group, and down the list. Just a look at a few of them would give us a sense of the strong stocks getting stronger and how earnings can be a key catalyst to take a stock in a volatile direction. UNH is a very good example of that because it just played from a deep pullback within a few trading sessions all the way back to new highs. And that will show up on the list. Beneath that is Bank of America, which is a financial stock that continues to be strong. Salesforce.com, another high there. Our weekly chart tells us the broader perspective, and that will be an all-time high, as does the daily chart. And Oracle, also lows, just to name a few of the 30 stocks in the broader S&P 500 that made new 52-week highs today. As always, caution is the name of the game. Protection hedges defense. We are in the middle of the middle, and this time we really are right in the middle of the pullback. As always, be careful and safe. This is Corey Rosenblum with tonight's Theo video update for October 14, 2021.